Joining us today is Michael Blythe, Chief Economist of Commonwealth Bank Australia, who will be speaking at SEAAOC 2009 in Darwin from the 9th to the 11th of September. Welcome. Michael, what are your thoughts on the outlook for the resources industry in light of the current economic climate?
Well, we've certainly seen some big changes in thinking on where the economy is going, and all of a sudden we've discovered that the outlook's not as dim as it looked only a few months ago. And I think a big part of that story is, in fact, the resources story, because one of the reasons the Australian economy has sort of defied the global recession, and weak as our economic activity may have been, we've had a very good result. It's because of the sort of backlog, if you like, from the mining boom, and the fact that now that the global recovery is being driven by China, clearly a key part of the commodity story for Australia these days.
What are your thoughts on the outlook for the Australian economy over the next 6 to 12 months?
Well, we still need to be a little bit cautious, I think. The one thing we know about financial crises, and of course most of what we've seen has been a financial crisis, is they do tend to keep recoveries pretty weak in their early stages. So I think we've got to look for an economy that, while it's growing, is growing at a slower than usual rate. That means we haven't seen the peak in the unemployment rate just yet, but it does mean, though, that inflation will continue to edge lower. This sort of environment where, while there's a lot of interest rate rise speculation now, I think lower interest rates will be in place for a while yet.
What are some of the key decisions that will impact the economy over the next 6 to 12 months? For an oil and gas example, Chevron's mooted Gorgon project is looking at getting the go-ahead in September and things like that. What are some of the other sort of factors that might come into play?
Well, that whole capital spending story, I think, is really one of the keys. It is the weakest part of the economy at the moment, and certainly only a few months ago there were big concerns that the way companies were cancelling, deferring their capital spending plans, it's something that could have deepened and lengthened the downturn in Australia. But now all of a sudden, with that sort of global backdrop, the China story looking a lot more positive than it was, with the Australian economy appearing to turn the corner as well. It's certainly a sort of environment where we may see some of those projects and some of those big projects suddenly look a lot more attractive, and they are potentially big drivers of the Australian economy.
What do you hope delegates will take away and learn from your presentation at this year's SEAAOC in Darwin?
Well, I hope they have a better understanding of how we got into the current mess. There is, of course, a lot of acronyms thrown around: GFCs, recessions, depressions. We argue about all these sort of terms, so hopefully understanding how we got there, how we're getting out, and some idea of what the risks are over the next year or two.
Okay, thank you for joining us today, Michael. We look forward to your presentation at SEAAOC. Thanks very much.
Thank you.
Cheers.